Does it make sense to buy low and sell low, or to buy high and sell high? Or should you do the one thing that I always say you shouldn't do, which is to time the market? If you're truly trying to do this, no matter what everyone else is telling you, and you're going against all logic, then watch till the end of this video on how to do this properly so you can save yourself some money and potentially make some long-term gains on your next property. The scenario is this: you already own your home and you want to sell so you can move on to the next property. Your current home is a townhouse in Toronto worth $875,000. The house you want is a detached two-story house in Toronto. Its market value is $1.3 million. We're going to use the current market condition, which we can say is not a hot market, meaning buyers and sellers are not as active as they were compared to about a year ago. To buy the $1.3 million house, you put together a 20% down payment. This works out to be $260,000. To keep the full 20% completely aside for your mortgage, you also put together some savings for closing costs. Your closing costs would be comprised of various expenses, but the largest expense would be the land transfer tax. If you're in Toronto, you pay a provincial and a wonderful municipal land transfer tax. Not in Toronto, then you get a bit of a break and only pay a provincial tax. The land transfer taxes on this house would be $44,950. And by the way, if it wasn't in Toronto, that would only be $22,475. And since we're using today's market conditions, let's also assume you're going to get a mortgage rate of about 5%. You'll spread the payments across 30 years, and for simplicity, we'll say the rate is consistent throughout the entire term. Fast forward 30 years later and your house is paid off. Throughout the loan, you paid $969,000 in interest. But hold up. If that sounds like a lot, then just wait until you see the comparison of buying high and selling high. And before we get into it, let me just explain why homeowners might sometimes wait to do this. They would have seen their property worth more at some point in time. Maybe when market values in the city were high because it was a hot market. Market comes down, much like throughout 2023, so they decide to wait for home prices to increase again to get back to those high market values. This psychological trap we get caught in is an anchoring effect. We saw the high price, and now that becomes the bare minimum of what we want. That's the anchor. We use the first piece of information to make subsequent decisions. As a wholesaler, going any lower than the anchor, and it's like you've lost money and made a bad deal. When in reality, depending on your real estate goals, you should just work with the existing market conditions at the present time, which is the right thing to do and not to compare what was going on about a year ago. Okay, so back to the example. Let's say instead you decide to wait a full year for the market to go up so that you can sell your home for a higher price. Sounds like a good plan, right? You wait for a full year and home prices have gone up by 10%. So instead of $875,000, your home is now worth $962,500. That's an equity increase of $87,500, which is amazing. But because the market has gone up 10%, the home you want to buy has also gone up. Instead of $1.3 million, it's now worth $1.43 million. That's a whopping $130,000 more. Were you saving enough during the extra year? Here's the math. Your original down payment of $260,000 is now worth less because you would need an extra $26,000 to make a 20% down payment. The land transfer taxes on the new property value is an extra $5,200 for the same house. When we look at interest payments after 30 years, you will have paid $1,066,846 in interest. That's a difference of an extra $96,986 in interest. So what's the bottom line? Even though you can now sell your house for an extra $87,500 of equity that goes right into your pocket, you're actually using that equity before it even gets in your pocket to offset your higher expenses associated with your new home. So the extra down payment plus the extra land transfer taxes and the extra interest paid towards your mortgage ends up being an extra $128,000 to purchase your new home. This happens while you wait for the market to go up again so you can sell your home at a better price. And sure, you can factor in the equity increase of $87,500, but the net difference is still an extra $40,000. Worth it? Let me know in the comments below. If you're new to the channel, thanks for dropping by. My name is Fred Tam. I'm a real estate broker here in Toronto with Home Realty. If you're enjoying the content, hit subscribe and stay updated for the latest real estate market updates and for the best real estate tips to help you reach your real estate goals. In this specific video, I'm giving you some examples of what people actually go through and think of, but by no means is this financial advice, and you should always seek a professional when it comes to making your personal financial decisions. Okay, so now let's say you want to avoid all of this completely. You don't want to buy low and sell low. You decide you're avoiding the purchase of your next home at a low price if it means selling yours below that anchored market value. You also don't want to buy high and sell high, getting stuck with a high purchase price while waiting for your home to go up in value. Instead, you have a different goal in mind. You're aiming to sell your property for the best price and then purchase your next one at the lowest price possible. We all want this, and you know what I'm talking about. But how do you do this? The buy low and sell high strategy is all about timing the market. If you're dead set on trying to flip a property in a few years, you'd buy your property when the market is at its lowest, or really just when it's not a hot market. An example of this is when the pandemic brought home prices all the way down, and also last year, and really the present right now as well, when mortgage rates also caused a drop in overall home prices. The real estate market doesn't fluctuate as often as, let's say, the stock market, and nor does it fluctuate as quickly. For example, you might see the stock price of Tesla sitting at $200. But then suddenly, Elon Musk announces the release of a new electric vehicle with a base price of $20,000, and it can also go 1,000 kilometers at a single charge. FYI, I'd buy that, but not financial advice. This kind of news ends up pushing the stock price up to $250 a share. But after a few days, it balances back out to $200 again, all in a single week. So now with the housing market, you wouldn't see your home value go up and down by hundreds of thousands of dollars in a single week. It could take months or even years before you see similar gains or potentially losses. So after buying in a down market, you wait a few years and the market does go back up, as it usually does, and that's when you sell for a potentially large profit for the highest returns. And this is usually around the same time when buyers are competing in multiple offers. The buy low and sell high strategy is based on what's impacting the real estate market cycles. I don't always recommend the strategy, even if you're a seasoned real estate investor and you truly understand what you're doing. But if you decide to pull the trigger on this, and if you are successful doing it, you will capitalize on the natural fluctuations of the real estate market. So where are we today with the market? Home listings are still on the quiet side compared to a year ago. If you're out there and you're looking at property listings and you're wondering why you're not finding anything you like, there's a simple explanation for that. Similarly, if you're a home seller and you're seeing your home value has gone down by 10%, it's all because back in 2020 and 2021, the market saw high demand due to the fact that home buyers had access to record low interest rates. More buyer activity meant more competition, which also meant more home sellers taking advantage of the hot market. Today, we're still in a down market. What you do with this information is always up to you. Will market values eventually hit new all-time highs? 100%. Will it take time to get there? 1,000%. But remember that you'll miss 100% of the shots you don't take. Thanks for watching.